letters. The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Hey, looking good, Billy Ray. Feeling good, Lewis. Okay, we'll take a look at the DAX this morning. As you can see, it's been in a nice uptrend here for the last few days. Looking at this chart. We had a little bit of an ABCD pullback here, so it's very interesting whether it's going to have a pretty good rally or not, but so far it's holding up relatively well. If we take a look at the FTSE, which is the more bullish of the two by far, you'll be able to see here that we are basically making an ABCD pattern at the 382 level here. Haven't quite made it yet, but very, very close, so keep an eye on that. It's going to be very interesting. Now, overnight, we had a couple of big things happening. I don't know if it means much or not, but I'm going to just share it with you because, you know, one of the things that you have looking forward to you as you get in your old age is that you get to stay up at night sometimes. And this is what we're going to see this morning. This is the NASDAQ all night. This is going back to the high that we made way back on Thursday, which was the high for the contract. And then you can see, hold it, let's get it up here first. You'll see that we made that high up there at the 73.60. That was a 1.618 expansion over the 3 days range between the 18th and the 20th. Then we came down to a 61% retracement at 72.24. We rallied up to a 38% retracement, 72.75. And last night we completed that perfect ABCD pattern, just spot on at 71.44. The way I look at this is that if we go below that 71.44 level, we're going to be looking at some really serious corrections because I think we were down about 75 in the NASDAQ. We rallied back a little bit since that point, but this is a very important ABCD to pay attention to. Remember, this is only the third day off the high, so anything can happen, and it usually does, so kind of pay attention to that. We had one other one that looks interesting too on the overnight scenario that you might be interested in, and that was in the Treasury bonds. Looking at the September bonds here, you'll notice that we had a perfect ABCD in the September bonds going up there at 144.15. We're now trading about a half a handle lower than that, so that pretty much verifies that that ABCD pattern is complete, and it was at a perfect 1.618 expansion of that number. So that's another one that looks pretty interesting. Now, I've had a couple of questions over the weekend about the time at Drexel, and all I can tell you, folks, is that, you know, I just stumbled into that job. You know, they asked me to come for a meeting at the Beverly Hills Country Club back in early 1976, and it was about 2 o'clock in the afternoon, and I had a new sports car. And I thought I was really hot potatoes, and I got there, and gosh darn, the cars that were there were just unbelievable. I walked into the dining room, and the porter was there, and he knew I was there to see these bankers because they're the only ones that were dressed up that way. But on the right-hand side was sitting Dean Martin and Joey Bishop. And boy, from Terre Haute, Indiana, to see something like that, I realized I had arrived. I had no idea that I was going to take that job. I was just there to go there to have lunch because you didn't get in that place without an invitation. So that was pretty much it. And you know, the people that came into the Drexel office all those years, I mean, the movie stars and celebrities, they were there so often, nobody paid any attention to them. I mean, Smokey Robinson was there probably 3 days a week with his best friend, who was Quincy Jones, the great music producer, and he was married to Peggy Lipton, who was on the cast of the Mod Squad, and Ty Ganders was in my office every day unless he was on location. And so they were there all the time. Jonathan Winters was there all the time. John Davidson was there, Juliet Prowse. The rifleman, Chuck Connors, he only lived about 2 blocks away, so he would walk there. So they were there all the time, different ones. There would be some big celebrities like Bob Hope come in once in a while. Perry Como would come in, and there were a whole bunch of them, and some of them have long since passed away. But that's the way it was. I mean, just never paid any attention to it. It really wasn't. I saw more movie stars when I went to the racetrack, which was on Wednesday, Thursdays, and Fridays, because Drexel had a box at Santa Anita and at Hollywood Park. Nobody ever used it on Wednesday, Thursday, and Friday. So I would go there, have lunch, and I'd be home to pick up the kids by 3 o'clock because all the markets closed at 12. So it was a fairy tale. I mean, it really was. I mean, it was just an amazing thing. And, if I hadn't wanted to go and trade on the floor of the exchange, I'd have probably stayed there till they went under. I don't know. So we'll see. I was just lucky. I was just flat out lucky is what it was. You just sometimes you look around like sometimes you're walking around lucky and don't even know it. Well, by golly, that's what happened to me. It was just one of those lucky things. I'm still friends with so many of those folks that the Drexel people. I mean, some of those guys are still working, believe it or not, in their 80s. They've worked for other firms now. They're only working part-time, but it was a lot of fun. The reason why so many people came there is because Mike Milken got in at 4:30 in the morning. They ran the second, third, and fourth floors. There were about 150 to 200 employees there. Our level, which was on the first floor, which is the domestic stock and commodity section, we had about 75 people. We had about 25 brokers and then the support staff. And Margot Grant, who was Jim Twentyman's main squeeze, she was in charge of the catering for Mike Milken. They catered breakfast. And when I say breakfast, they catered an incredible breakfast spread that you wouldn't believe. They had Nova Scotia salmon flown in every day. I mean, it was jumbo shrimp. I mean, you wouldn't believe. And when they were finished with that, by 7 o'clock, our brokers would come in usually around 7:30 or 8. Margot would have her staff take the leftovers and prepare them for us down on the first floor. And so, people would come in and just to snack off that stuff because it was amazing. That went on for 6-7 years. Anyway, that's how all that stuff happened. And they were really, really pretty nice people. There are a few schmucks along the road, but most of them were really nice. But that's how I just got really lucky. That's I've always been appreciative of that. That's for sure. But I really had a lot of pictures. Unfortunately, I lost those pictures, but it was a lot of fun. Anyway, let's get back to these markets here, folks. Something really big happened in one particular market last night. Let's say this on Friday because that's when it actually occurred. I want to share it with you, and then I want to share something with you from the our good friend Jim Bartolioni book. I'm going to do that at the break, but let's take a look at something. I want you to defy human nature now and do the work yourself. This is the long-term weekly chart on platinum going back over the last 3 years, and I would like for you to take a look at the ABCD structure that you see between 2017 and 2018. On Thursday, let's try that again, Larry. On Friday, we hit the exact ABCD pattern down there at 852. Just absolutely spot on. So this could be a major bottom in the metals. Now, we've taken out the November lows. We haven't even come close to that in gold. Gold has only been able to make a 78% retrace. We'll take a break. We'll talk a little bit more about this, and then I want to share a chart with Jim Bartolioni that you're going to like, I think. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I've posted a chart here on the gold annual cycle. This is from our good friend Bill Meridian, who will be our guest later this week. I'm also going to have Norm Winsky will be our guest tomorrow, and later in the week we're going to have Dennis Gartman of the Gartman Letter will also be on. I'm trying to work that out either for Thursday or for Friday. But if we take a look at this annual gold cycle that Bill's worked out, you can see that there's a positive bias starting in June, and it really starts in July, August, and September for positive up moves in gold. Now this is over a long period of time, which means the probability is that it'll go up during that time. It's not a certainty, folks. It's just a probability. But when you look at that with the fact that we're possibly made that big ABCD pattern in the platinum down there at 852, we're trading around 869 right now. That's a very, I think that's a positive thing. We'll have to wait and see if it unfolds that way. But that's neither here nor there. Now I wanted to share with you a really interesting chart. Now this is from our good friend Jim Bartolione, who does a lot of work on a lot of economic type patterns. In other words, how these things line up technically. And I'd like to share with you, this is one that shows the tech companies and how they issue bonds that can be converted to stocks. But what's interesting here is look at the high in 2000 when they did 12 billion, and look at 2007 when they did 10 billion, and look where we are now, boys and girls. Hello, 13 billion. That's a lot. That's even, way above the one from 2000. So we need to pay pretty close attention to that. Now, last week, if you remember, our good friend Mr. Z here in the room brought to our attention the fact that NASDAQ went up to a 1.618 expansion of that move. And so far, that has held. So it's important that we keep a very close eye on that. I think the key figure today in that NASDAQ is if we take out those lows that we talked about that happened earlier this morning at 71.44, you're going to see a pretty bad day in the market. And folks, people ask me the question if this is related to these tariffs and stuff. Believe me, and most of you know where I come from with this, is I have no idea. And frankly, I don't think many other people do either. If you look at the amount of money that's out there in trillions of dollars, and you're talking about 200 and 300 billion. I mean, that's not a lot of money, but it's the thought of increasing it more and more that makes it more difficult. But China's been eating our lunch for a long time, especially with proprietary rights, breaking intellectual property stuff, and that's that's not really good. Just to give you an example, a Lego set here in the United States runs about $128, and if you bought it in China, it would run you about $28, and they're manufactured in China, so they're pretty much the same thing as we see some of these things unfold. So anyway, let's just keep working towards some of the things. But watch this possibility of this thing with these bonds, because we've always said that these bonds have had a yes. Someone's just brought to our attention that July 6th is the date that China is supposed to do the same thing that Mr. Trump did on June 14th. So that'll probably, well, that's right after the holiday too, so there's going to be a lot of rocking and rolling during that time. So we're having more volatility for sure. I don't think there's any question that we're not going to have more volatility, but it's important. But this trade stuff, I really don't. Here's a chart that Rich Anderson sent to me that's really interesting. I don't understand the ramifications of it, but this is all the different countries, and it shows them in relation of their GDP as compared if it were a state in the United States. I mean, you're talking about, we can cover everything, so that shows you how big the U.S. and China are. So you've got to be able to really take a pretty good look at it. Yes, I'm going to have Stan Harley on next week, and we'll definitely enjoy having him on again. So we'll enjoy that also. Okay. Let's move on to one other thing that I wanted to talk about, and that is frustration in trading, folks. Let me show you a major frustration. Let me just give you one right here. We'll put this up here, and this is the Canadian dollar. No, it's not on that map, Mr. Bill, and the reason why, it was everything but the U.S. and China, because they're the 1 and 2. They wanted to put all the others in there to show you. Japan wasn't in there, nor was Great Britain, but it just wanted to show you all the other smaller countries and how they were really very, very small compared to the others. That's really what it was. Rich told me it was just a basically comparative chart that's showing you the battle is basically between, China and the United States. And, they're, I don't know if they'll figure it out or not. I don't know. But let me just get back to the frustration. If you notice here that the Canadian dollar got to 133.88 on Friday, and then reversed and dropped 160 pips, which is a lot. It's around $1,200. Folks, I had an order at 133.90, 2 pips away. And of course, it hit it really quickly, and then it sold off. I mean, it was not there for more than a millisecond. So you had to have your order there, and it had to get through it. But I didn't get filled at that spot, which was a little frustrating, and that's the way it is sometimes when you're doing this. But it came very, very close, but no cigar. So remember, this happens all the time. If you do any trading at all, you've got to get ready to be frustrated. You have to be able to take your losses, and you got to move on. The problem is, and Rich brought this out to me, something that Mark Douglas told us many, many years ago, and that is that, people spend 2.5 times more worrying about the losses that they've had than the gains that they've made. There's some real interesting studies on this, and I'm going to bring a special guest on to talk about that. But they spend all the time thinking about what they could have done and what they should have done. Yesterday is history. Today's the present. We got to open it. So you forget that, shake it off, and move on. Losses are like breathing. I mean, you just got to take them. That's all there is to it. You're not, if you don't think losses are like breathing, get another job, because, there's no one can you do. No way can you do this. I mean, just no way can you get out of this and, to make any type of a move where you're going to think that you're going to have a chance of being right all the time, because that's not going to happen. They're just not like the old Apache saying here in Tucson, Arizona, is nebahachi, which means never happen. So that's pay attention to that, because you're not going to be right all the time. The best you can do is if you're really good, you can be maybe right 61.8% of the time, and if you're right 40% of the time, you can still make good money if you protect your losses closely, and that's what trading is all about. It's protecting the losses, not about how much money you're going to make. So that's a key thing, to look at. Well, keep an eye on why it's going there. Women are better traders. That's very good, Tucker. Yes, they are never wrong, but women are better traders because they're not into the testosterone rush of having to be right. I firmly believe that. I don't think that they have a desire to be the breadwinner or knock the deer on the head to get the meat for the family, like back in the days of the starting of millions of years ago. But I don't know. It's different. That's all I can tell you. Okay, we got another break coming up here. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks. All right, we're back. We want to talk a little bit about the E-mini S&P here because we had a sell-off last night. It didn't get anywhere near where the longer-term period. This is the 60-minute chart here on the E-mini S&P. And as you'll notice on Friday, we had that rally up to just about the exact 61% retracement at 27.69. We hit 27.68 and a quarter. Last night, I believe we got down to those lows near that 27.47 level. I'm not even exactly sure how low we did get. I was watching the NASDAQ because that is the pattern that I was looking at in the NASDAQ completed, and I don't believe we did that in the S&P. Let me quickly check that just to be safe rather than sorry, because I don't want to give misinformation, which is not always good to take a look at. But if we look at that, we got as low as we almost matched the old low down there at 37, but we didn't quite take it out. The old low was at 35, and we got as low as 38 last night. We're trading around 27.43, but the target on that is down 13 points lower. And I think if the NASDAQ takes out that other low, you're going to be looking at something that is going to be, pretty nasty. But so far, it is holding up. Relatively well, given the other ones are doing. But if we get below that 71.40 level, which is 14 handles from where we are in the NASDAQ, that would be what I think would be relatively very, very negative, I would think. Now, several questions have been asked about the grains, if they've made a bottom or not. My assumption is yes, because we're 40 cents off the lows in the soybean market. We're about 14 cents off the lows in the corn, and also the wheat have bounced a little bit. So there's a possibility of that. We've got some hot weather in the lower part of the Midwest, but the upper part in Chicago, Illinois, and Indianapolis and those areas, it's nice and cool with nice wet weather. So it's ideal conditions. But in the southern part down by Memphis and some of those other areas, it's not quite as good. But more beans and stuff are grown in Iowa, Illinois, and Indiana than there are down in Tennessee. So nothing really dramatic on the weather front coming in at that point. So let's watch it. Now, as far as the bonds, long-term, folks, the bond market does not look very good. That's probably the understatement of the year. Let's just bring up a chart here to let you folks take a look at it, because this is one of the more let's just do the notes first, because that looks the most bearish of all of them. Those are the shorter term rates. And you'll notice here in the bonds that this is the weekly chart. And we had that head and shoulders pattern where we had that 382 level up there, way back in March. And that was an absolute, incredible place to, try to get short. You had the 20-minute line setting in here. That dark red line was right there. You had an ABCD right at just a tad above the 382 retracement. Your head and shoulders pattern was perfectly symmetrical from shoulder to head to shoulder, was exactly equal in time. And the right shoulder was much lower than the left shoulder, which means it's very bearish. And that ABCD pattern doesn't, stop until down here around 115 and change, which is quite a ways from where we are. So it looks like rates are still going to be going higher. People ask the question, how about rates in other countries? It's really hard to make that quantification, folks, because, we've got interest rates here, 3% or so on a little more than 3% on our 30-year bond. And you go to places that have terrible ratings like Italy and other places, and they're paying a whole lot less interest than we are. So why that is, I don't know. I think it's related to the fact that this bond market is where the problem is going to arise, if there is a problem. But that chart that Jim Bartolione showed us about how these tech companies are issuing bonds is a little scary, because that's every time that's been up in these high levels like this, there's been a slight problem. So we'll see if that's going to happen or not. But it's still a little early in the game to see if this is going to make any difference or not. Let's take a quick look here at the euro, because we had a big sell-off, of course, in the euro. We dropped over 300 pips, and I wanted. Are you kidding me? Where is? Oh, here we are. I thought I'd lost it. Okay, just a second here. I wanted to get this chart here on the euro. This is the long-term weekly chart on the euro, and what we're looking for here is a little rally that could extend for several weeks to take us up here to this 119 level, because we tested that 115 and change on Friday. It held relatively well. We bounced about 150 points off that bottom, giving back, half of what those 300 points we lost. So I think we could get up to that 119 over the next few days or weeks. And I think that would be a really good selling opportunity because that's a 382 retracement of that whole move down. And this is another one that is long-term, has some pretty bearish implications. I have no idea whether that has anything to do with Brexit. It shouldn't, because Brexit is related to the British pound, but the British pound is over there too. So I don't understand the relationships to that. I don't profess to. I just look at those charts, and that's all I try to do, is to find the patterns. And even when you find them, you don't get filled sometimes. Like in the Canadian dollar, there's really nothing you can do. But there's others that happen. You know, we had the Australian dollar acting incredibly well. We had that really nice Gartley a week and a half ago up around that 76.50 level, and the market, you know, broke really dramatically. We've had a little bit of a bounce off the 78% level, but it still looks like the target on that British pound, the Australian dollar, could be even a little bit lower. So we want to be able to be flexible on some of these, because that the way the things are in the environment politically is it's very, very tenuous, because we don't really know much about tariffs and trade wars. These are things that we've not had to deal with. So I don't know how to handle it other than to look at the charts. They're usually going to give you an idea of what's going to happen during that time. So all I can say is sort of pay attention to that, and that would give you the message that you need, that you'd be able to see it. So we'll be able to see that we're looking at it. But if this NASDAQ gets below that 7140, folks, that's not going to be a good sign. It's going to be breaking below that big ABCD after a tiny rally, and that's not a very good sign. We're down there. We're close there. So we're getting close to being to that spot, but we're not there as of yet. So, well, we're there now. So we're going to see if it's got anything going on or not. My assumption is it's going to hold right near that level, but that's just my assumption. And remember how you spell assumption. Anyway, let's assume. Anyway, not assumption. Regarding the grains, someone's asked a question about the grains. What I'm watching in the grains, folks, is we had that big bottom back on the 19th. We had a really strong rally, rallied, 50 cents. Of course, when it drops $1.50, 50 cents is only a 382 rally. Now there we just shattered that number now in the NASDAQ. So it's either going to melt down from here, or we're going to be very, very close to a bottom here shortly. So we'll see. The Dow Jones is held up relatively well, and the S&P's holding up, but the NASDAQ is still under pressure. We're back to the grains. We had that 50-cent rally in bonds, in beans. I want to see a 38% retracement. That's 10 cents from where we are now. That's what I'm watching. Take a break, 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Back, folks, and I posted a chart for Bitcoin. This is something we've been following relatively closely. Haven't traded it yet, but just following it. This, if you'll notice that red box that's there across the bottom, that's the longer-term ABCD targets that we have going back from 2011. That comes in just below 4,000 bucks. We're trading it. The last I checked, it was around 5,600. You know, we hit a high when we first started the things at the Merck back in January at right around 20,000. We're now at 5,600. The ABCD structure on this comes down to 3,800, 4,000 to 3,800. And folks, that sounds like it's a lot, but if you look at what Bitcoin has done since 2011, it's had four bubbles. I mean, it really has. I mean, it's gone from like $1.25 to 150, and then back to $4 and stuff like that. I mean, John Jameson from the UK has shown me the statistics on this, but there's actually been 4 of them. This is the 4th one, and they're all the same. They all come down about 78 to 80% of the previous range. That would take us down to around 3,800 in this. So you want to be looking at it. John's feeling is that it's not about Bitcoin. It's about cryptocurrencies. So if you believe cryptocurrencies are here to stay, you want to pay attention to this, because this could be a really interesting spot to take a look at these. And of course, the problem is there's so many of them out there that are probably, you know, like the .com bubble. They're just never going to survive. But the few of them that are, you need to pay attention to it. So we're following it just because of the fact that it's educational for us, and there might be a good trading opportunity here in this. But at 4,000 bucks, I mean, the only way you could do this would be to look at the look at the option market. And the open interest at the Chicago Mercantile Exchange is really yes, I had to reschedule Bill Meridian. I sure did. That was my mistake because of the OPEC meeting and stuff. I had that all messed up, Terry, and so I'm rescheduling him hopefully either for Wednesday or Thursday or Friday, one of those days. But I've got to get Dennis Gartman in because he had a scheduling problem. So I spend most of my time figuring that out. But we'll get it straightened out and get these folks on, because they've got some really good information for us. And then next week we will have, Stan Harley as our guest. But getting back to the Bitcoin, we want to watch it very, very closely. If nothing else, for technical reasons. I mean, because I don't know anything about the Bitcoins. I don't know anything about the cryptocurrencies other than it's like the internet stuff was, back in '96. That's all I'm told. So I'm just looking at the charts, and that's it. Now, I want to share one other chart that was sent to us by our good friend, Mr. MR in the den here from Washington. This is from the Elliott Wave stuff. Thanks, Terry. This is the showing the in gold. On the left-hand side is the gold pattern. It's showing a wave 5 completion. And then on the right-hand side, it's showing the S&P and presently. And you can see it's around that 2,700. And these patterns are very, very similar. And we've just completed the, a big Gartley a week ago in the S&P up around that 2796 level. So there's a possibility we could be looking at something like this that could possibly happen. Now, the trigger on this would be a move below 2700 in the S&P. That's 40 handles or so from where we are right now. But if we did that, you'd be looking at a potential, a move down to get that third wave down if that is going to be the case. But the patterns are very similar. These are Gartley patterns. That 0.2 on the gold chart is a Gartley pattern, and 0.2 on the S&P pattern is certainly a Gartley pattern. We brought that to your attention several times in here over the past weeks, and in fact, we'll get it back up here again. You'll be able to see, this is the hourly chart, but you'll be able to see that, right up here at that 2796, 2786. The high was at 2796. That was the big ABCD. This was the retest at the 78% level. So that's what it looks like. But the key level to watch is below 2700. I'd say 2720 in the S&P. If we get below that, then you're going to be looking at something that is going to be, relatively difficult to keep the market higher. That's what it looks like. Because remember, we have a market that is two-tier. We have the NASDAQ that is going wacko, and then we have the New York Stock Exchange Index that is showing a completely different pattern. If you look at this, you can see here the comparison between what the NASDAQ has done and what the New York Stock Exchange Index has done. You see a perfect ABCD pattern there, the New York Stock Exchange Index at that 12,888, and that's a 222 Gartley pattern. And yet you look at the New York Stock Exchange and the NASDAQ, and you're looking at three drives to a top with expanding tops. So the totally different market, much like we had in 2000. This was not happening in 2007. But this is what's happening right now, so you need to respect it. That's the strongest. The rule is you want to sell the weakest and buy the strongest. That's what the old textbook says when you're talking to Bernard Baruch or Jesse Livermore, any of the old greats, J.P. Morgan. Those were the things that they talked about quite a bit as we looked at some of these things. Now, there's another market that is very, very close. Let's take a look at this one here today, folks, because we just went up and took out Friday's high by just a little bit, and that's a 61% retracement on the daily. Someone just posted that in the room when it hit 69.45. The high Friday was 69.39. Broke a little bit from that level, but it's very interesting at that point to pay attention to it, because that's a possibility of a pretty good selling opportunity if the crude oil can't get much above this $70 per barrel level. Now, I don't know what happened with OPEC, but it must not have been much because the market opened lower and then has rallied back to unchanged. So we'll see if it means too much from these levels, but we'll watch it for sure. We've broken about 80 points, 60, 80 points already in the market, so it's going to be interesting here to pay very, very close attention to it. Now, so we have a question coming in here. Hold on just a second. See, we got a call from Philadelphia. John, are you there?
Larry, good morning to you, sir.
Good morning. What can I do for you, my friend?
I wanted to compliment what you had to say this morning about the NASDAQ 100 index, just by sharing an item you and I talked about timing. You'll recall, just for full disclosure, it was last week, Wednesday, the 20th of June, that the index cash market made a peak of 73.10. It was the overnight session after that was Thursday morning early, that the futures extended the rally. I think the high on that was 73.58, if memory serves. Well,
yes, that's what it says.
That 73.10 cash mark, as I had speculated last week, and you talked about earlier this morning, that was a precise Fib 1618 expansion of that 2000-2002 horrific bear market. So we got
to take a break. Can you we got a guest right after. Could I chat with you again tomorrow, buddy?
I'll call them. Thanks, Larry.
Hey, thank you, John. Appreciate calling. We got Al from Tampa calling back. Be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we've got a caller from Tampa, Florida. Al, are you there?
Yeah, hello?
How are you? What can I do for you, my friend?
Yeah, I want to go ahead and look at AMD.
Yes, sir. I posted it into the room. What can I help you with?
Yes, I'm wondering how much it's going to pull back and where a good entry point is.
Well, if we look at the last correction that we had, Al, we went from 14 all the way down to 9. You know, that's a correction of about 40%. So 40% from the $17 level, from 9 to 17, 40% of that would take you down to around $12 a share is what it looks like to me. We're trading at $15.51 right now. So another 20% lower, I think you'd get down to that $12 level. Would be a pretty good entry point, would be my best guess. And that would be almost a 61% retracement of the low from March.
Okay, I also want to say that I'm Al from Tampa. I've been waiting I waited 12 years, 21 days, 2 months and 21 days for my VA case. Everybody's known it, and Tom is too. And they finally came through and gave me my disability as a veteran in that. And I had under Trump and that, I had them. They went ahead and had a hotline, and they did follow up with me on calls and also to problems I've been having. And I just want to thank Tom and the people in that supported me in that to finally get what I deserve as a veteran in that. And I just haven't been able to talk to Tom. Just got back from Europe and that vacation I took my wife on. And I want to thank you guys for helping me being able this past year to save up enough money before I got the VA to be able to take my wife on a lifelong trip. And
God bless you for your service. You deserve it.
Thank you very much for all your analysis and stuff like that, and the way that you're helping other people be able to save and get through these markets and that.
Thanks a lot, Alan. Good luck to you, my friend. Thank you, folks. We'll see you tomorrow, folks. Thank you, Alan.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.